All right, everyone, welcome. Today is Saturday, September 12th. My name is Steve Vetterl. I am the firm's chief market analyst. But that big title makes me have to do lots of things to work hard for you guys. But essentially, I'm just your risk manager. Welcome to the Saturday edition of the Forex Forecast Trade Week call. All right, let's do a favor if we could, please. Just getting set up here, making a couple of different people, panelists, so apologies for the late start here, but let's run through real quickly the risk disclosure. Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So while we're doing that, if you guys could please, the Q&A window is now open. I also do want to do a check, if we could please, on sound and video. And I'll go through the rest of this. Make sure always to put your questions in the Q&A window, please. So let's read through the rest of the disclosure. Before deciding to trade the foreign exchange market using any of our software or alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. Most importantly, can you afford to trade with the money that you want to go live with? Keep in mind that a lot of people say, yeah, I can, and then they experience some loss. I'm like, oh, I really couldn't trade with that. So, be honest with yourself on that. Page 2, risk disclosure. If any of you are sharing results from Alexander, Iris, Einstein, any of them, we're going to show a little bit of variable today. We've got 3 other pieces of software coming out and 1 other one in the pipeline. Do not use company recommended settings, because really the settings are coming from the developers, myself, different coaches, your team. It's not coming from Auvoria. So we do not recommend any settings. The firm is not a financial advisory firm. That would be my role. Auvoria licenses software that users can use however they want and at their own risk and discretion. So some software does come with default settings upon initial setup, essentially what we call out of the box, which users have the ability to customize their settings however they want. So Auvoria has nothing to do with a customer's brokerage account. We don't solicit or take investments. We don't recommend any brokers. We're just licensing software, and most importantly, the education that goes along with it. So a shout out to, if you guys go into the back office, I know we have a number of new subscribers this week. So for those that are first attending this call, thank you for taking the time. I have had a lot of people ask me, hey, Steve, what's your setup look like? So I put a slide together to show it. So this is where the magic, in some cases, some bad trades happen as well. So this is the trading office and desk, and there's my ugly face. So let's go into the Forex calendar. Let me shift over to the next screen, talk about what's going on in the markets today. For those that are joining, if you want, let your upline and downline know that we have a special guest coming on today. His name is David Mays. He is a fantastic component to this team. He has done a tremendous amount as far as helping out the developers and different beta test groups, offering a tremendous amount of insight, as you will see this afternoon, on some different settings for Alexander and Einstein. Yes, I said that, different settings. Okay, so in addition to the high volatility settings, which again we'll touch on real briefly for some of our new people, but let's take a quick look at the Forex calendar. So big deal this week, in my opinion. Wednesday is the FOMC statement and press conference. I imagine this is going to be online like they all have been. But what Jerome Powell, the head of the Fed, says this week in the press conference, it could be quite tricky and rocky for the U.S. dollar. And as we talked to this, as I've talked ad nauseum essentially last month, USD, in my opinion, is moving everything else around right now. It is the lead currency in spot number 1. So related to, what do we take on another stimulus bill and go more damn in debt in this country? Is that's going to affect the dollar as it drops down, and so forth. So those are, so I mean, the cool thing about this week is, and again, this is September 13th and 19th, there's really nothing going on Sunday, Monday, or Tuesday. So honestly, you guys, If I was you and you're running Alexander Einstein, Iris, you're taking trades, I think clean sailing, in my opinion. I know the developers are running this week until Wednesday, right? I would probably have the systems off. And please don't ask me this question because you can already see it coming. What if I'm in drawdown state? If you're in drawdown, you may want to turn the systems off. Who knows? The problem with that kind of suggestion, as I talk a lot about, is that if I'm telling you to turn it off and it turns that you would have caught some fantastic trades, who knows? Maybe you were short, or I should say long Euro USD, as the dollar may sell off this week. Just jumping over to the chart. Let me go to the dollar here. So I've been showing this chart a lot. This is tradingview.com for some of our new folks. This is a fantastic system. I do not own nor do I endorse, but I use it a lot. I think it's great. It's cheap. And you can do tons of different stuff with it. So we're just looking at the US dollar here. Okay. What's often referred to as the DXY. Notice we've had a pretty big sell-off. This is a daily chart we're looking at in a candlestick. Notice we've been in a tight range, as I said we probably would after a fairly protracted move down. Ideally, if we go to a longer-term chart on this 1 week, you can see where I think this thing's headed to. As I've talked a lot about, I think our first stop is somewhere in the 89 area, ultimately getting to the 85-ish area is where I think this is headed. Especially if we continue to put out more stimulus bills, and globally that certainly could be the case as well. But just taking a quick look at the dollar here, let's jump back over to Euro USD. This comprises most of the volume inside of Forex. This currency pair has spent, and we're looking at a weekly chart, so you get a little bit of a longer. Well, we spent certainly about 4 or 5 weeks balancing inside of a tight area. Let's drop down to a daily chart. You can see this particular area, after a protracted move up based on dollar weakness, we've moved into this level, and we're just bouncing around in a tight range. Will we break this week lower? I have no idea. I think a lot of it is going to be dependent upon policy change and or continued debt by our folks on Capitol Hill, who right now are acting like a bunch of idiots on both sides, so they can't seem to get anything done. So in any case, that's the euro. Let's take a quick look at GBP USD. Now, a lot of this has probably had something to do with Brexit. And I know there's, the markets, every time they seem to get a whiff of and not a smooth sailing removal, or I should say move out of the European Union, the currency has a tendency to take a beating. So contrary to anything that's been U.S. dollar related, that the dollar is weakened in most of those other currencies of strength, it's been the opposite of this one. So as I said, we first stop more than likely, and then head to what I view on a daily chart that you're seeing here is a pretty important level right around the 28 area. So we're holding firm on that. A little bit of a bounce may not amount to much. This thing could absolutely sail south if they cannot seem to get these trade deals straightened out as far as the last piece of this Brexit package. But that's just my view on what's going on there. If you have any questions, a little bit of a deeper dive that I normally do in these currencies, but I'm sort of glazing through this pretty quick today. Let's see, anything else I want to show in there? Let's take a look at, I haven't really shown this much because, again, nothing really going on to any large degree. I think the yen's really waiting to see what the heck happens in the U.S. as far as any additional packages of debt. So we're sort of stuck, as we have been for many days. Take a look at Euro JPY, our favorite rotten currency. This particular one looked like it, from a daily perspective, had a little bit of a cup with handle type pattern that it broke out from and moved up. And now notice this particular level has been support, but I don't really see any particular direction inside here. Okay. And for let me just check one thing. All right, there we go. All right, so let's jump into anything else I want to talk about. GBP NZD. Notice what's going on here, by the way. Back down to what I find to be a pretty big level. Let's see if I can move this chart around for you guys so you can see it. See this area down here? For those of you trading GBP NZD, it can get pretty treacherous, as it already has been for most of the summer. But do keep in mind how important that level is. If we bounce off it, we certainly could be back up into the area. But if we get below this level, it's as we like to joke, that the train off the cliff at this point. I have no direction on this thing. All right, anything else I want to talk about? Notice how the S&P bounced off of key level that it broke from towards the end of the summer after the big sell-off. Notice how that's holding firm there as well. So gold, again, holding well. So GLD, it's just a spider that represents the area of gold. Big area of support as well. I think this has been somewhat influenced, obviously, by the dollar. As the dollar continues to weaken, metals will typically rally. All right. What else am I going to talk about? All right. Let's take a look at the Forex calendar. Do note on Thursday, we have some UK-based events coming out, monetary policy, bank rates, so forth. Always pay attention to just the red folders for some of our newer folks. I filter those out just by looking and removing the orange and yellow. Not as important. All right. So here is the Einstein conservative account. This is denominated in euros. We set this account up with just a little bit under $24,300. We've taken 3,700 out of this in profits, and it has really had a nice upward direction as of very recent. So this link is on my Telegram channel. I think it's probably have to scroll a little ways back, but you guys can see that we've pulled ourselves out of drawdown. We've also had a pretty, this was actually our best month last month in August with a positive 6.83%. For those of you that are new, this is an account that is set up with which I'll show the settings in a second in Einstein. This is an account that's set up with a 0.01 lot size per 3K. This is running essentially a little less than 24,500 euros right now. So let me swing into the system here, get set up for you on the VPS. We use virtual private servers to host our MT4 platform. They do the trading for us. Unless you are in the US with Alexander, in which case they will send you the alerts. So here are the high volatility settings. Just want to give you guys just a quick refresher before we bring David in to talk about. I'm going to allow him to share his screen, and I'm sort of going to just let him run with his expertise. But these are the high volatility settings. Again, for some of our newer folks, you might want to pay attention to this. We have the settings set up as a trailing equity. You can always adjust this from trailing equity to fixed, in which case if you do adjust this back to fixed, you just drop down here. You could select fixed weekly goal. If you do decide to do that, your fixed weekly goal, in this particular case, the default setting of 3%, is always adjustable, but your fixed weekly goal is in play. We choose to use trailing equity. It's entirely up to you. If you use the fixed weekly goal, you're just going for a weekly goal. Doesn't mean the software is protecting you in any way, so it certainly can turn itself back down and go into drawdown. If you're using trailing equity, default settings 2%. So as soon as the account goes up 2% in value, the equity rises 2%. As I like to say, your security guards jump out and start running around your account. And if it falls back to 1%, it will blow out and give you hopefully 1% return. So there's a lot of stuff I've shot in the past on this. I'm not going to talk too much deeper on that, but I thought things like stop loss of 500 pips is just a fairly new setting. Our range multiplier along with our position size multiplier was just a quick refresher before I bring David in to talk about how he views the settings to be different and sort of make his case. So as I have done with all of the developers and or some of our top leaders like David that are really in the mix, Jesse, so forth, I always tell them to sort of come in and plead their case, not only to me, but to the other corporate leaders at the company, so that we're releasing settings to, or any different or changes in settings, and this is going to be an additional set of settings that we're going to run demos and live accounts on, that these be exceptionally vetted. Okay. So as many of you know, I don't really have a lot of time like David and some of the others do these massive deep dives and these Jesse, Johnny Neutron, terrorizing through spreadsheets. I just don't have the time for it. So I really appreciate it when you guys can come on and, sort of help me understand what could be different. All right. David, can we hear you? Let's do a quick sound check if we may, please.
Hey, Steve, can you hear me fine?
I can. Can everybody else hear David? Can we just, through the chat window, just throw in a quick notation, please? David, we can hear you. David, we love you. Thanks for coming on, dude.
So, shall I just start?
Yeah, go right ahead. Feel free to share your screen, start off, and I present to you the Master David.
Awesome. Thank you for the introduction, Steve. And as always, I always look forward in listening to your calls because unlike me, yeah, you have an awesome understanding of what's happening in the markets. And yeah, that gives me a better, how should I say, insight on what to expect in the week. So, and from there, I take it on with my settings, of course. So first of all, let me give you a bit of background information about myself so you can judge yourself if I'm worth listening to. So I'm in the EA business from the first company the market hackers community joined. So I already saw a lot of things that didn't end well. But instead of giving up and blaming the software or other things, I always try to figure out what went wrong and if it was possible to prevent it, and how I could improve my settings for, to prevent future losses. So that's also why I spend every month $1,000 on licenses. I just by myself to be able to collect and compare data. And I finally, in my opinion, found a solution for Einstein and Alexander. So I wasn't convinced of the previous settings because they did have a weak spot. Even if the chances were small, it was still there. So the reason why I had a different view is because I look at it from a mathematical point of view combined with historical data of a chart. So I've been testing my train of thought and doing it differently for about 3 months now. And after more than 2 months of data, I compared it with the results from other accounts and noticed a big difference, as you can see shortly. So I shared my findings with Steve and Auvoria Prime so they could take a look at it and see if it was safe enough to share it with everybody. Because first of all, with every new strategy, there also comes a certain risk. It is never wise to just turn the wheel completely without first understanding the new strategy, even though it might have worked for others. So it's always very wise, especially now that the monthly cost will be virtually halved, to demo test this strategy next to your current live account for a period of time until you feel certain that you mastered it enough and that you have data you can compare for yourself with your previous settings. Okay. That being said, let me see if I can share my screen. Oops. Okay, can you guys see my screen?
Yeah, we can see you. Go right ahead, brother.
All right, thank you. So first, let me show you some results, okay? And it's really easy to compare these results with other people's MyFX books. I know that in the result page, there are other people who share their MyFX book. So you can always check for the same period of time. The way you do it is very easy. You just go to custom analysis. And then here on start date, you just click the start date that I started it, like just say 15 June. And then you click on analyze, analyze, and then it will show you the results of the same period of time, because I believe you always have to compare data from the same period of time, okay? So I tested it out on demo on 2 accounts. Like first of all, a really small account of 500 bucks. Let me check something first. No, that doesn't work. Okay, never mind. For 500 bucks. And this settings has a risk factor of 60%. I will explain, tell a bit more about that later on. But as you can see, the monthly profit was about 20% compared to a maximum drawdown of almost 15%. Now, these two accounts that I'm showing are recorded to MyFX Book with a 5-minute upload with the EA. So it has really accurate data. So this one, I will probably let it run until $1,000. I just want to see how it would run from a small amount of money until it doubled. And this one here, here I started out with 3K. First, I did run it on 2 pairs, Euro USD and USD GPY. But in the end, I saw it was a lot better to just run it on 1 pair. And as you can see here, also there's a risk factor of 61%, and the profit, monthly profit 21% versus a drawdown of almost 11%. Now, really important, I forgot to say this one didn't run for 2 weeks, like middle of August, and last week I just noticed by Tuesday that the software was logged off by accident. And once on Tuesday, I don't start it. Even though I would have made profit with this one, I didn't do it. Okay, so it should have like another 9% on top of this. And this one also, I didn't run it for 1 week in August. Also, it was logged out, and I noticed it too late by Tuesday. So I didn't restart it. But here you can already see a really important difference in drawdown. Here you see 15% and 11%. So that's a really important feature, first of all, with these settings. The higher your balance, the safer you can get for the same results, or taking the same risk and gain more profit. Or something in between. So that's really exciting news. So here, let me go over, before I go to the settings and the rules, let me quickly talk about this. This spreadsheet is only a tool and by no means any guarantee on making a certain fixed percentage gain every week. It's used as a calculator to give yourself some insights in more complex mathematical calculations, and by no means intended to entice prospects into promising certain amounts of gain. Hypothetical performance results have many inherent limitations, some of which are described below. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical performance results and actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk in actual trading. For example, the ability to withstand losses and to adhere a particular trading program in spite of trading losses are material points which can adversely affect actual trading results. There are numerous other factors related to the markets in general or the implication of any such specific trading program, which cannot be fully accounted for in the preparation of hypothetical performance results, or all of which can adversely affect actual trading results. Past performance is not necessarily indicative for future results. And this is a tool provided by an independent affiliate, namely myself, as a resource, and by no means is a resource provided by Auvoria Prime LLC. That being said, I am also no financial advisor. What I'll share is the way I use this software and my personal settings, and it's up to you to judge them yourself. So first of all, there are some rules. Okay, the first important rule is only turn on Alexander or Einstein when the developers are running the softwares themselves. This is one of the main rules. So if you want to know if they're running, watch the forecast of Steve. He will say it. So sorry, Steve, for this week. I was just, I heard you said it, but I wasn't really, I was distracted. So I didn't hear if they're running this week, yes or no, but I will see it back in the recording. So second of all, if you have a positive week's performance before Tuesday evening or Wednesday evening, but your fixed weekly goal isn't yet reached, it is safer to either close out and take the profit that you have, which is the best choice in most cases, or change your profit management type into trailing equity. Your start has to be lower than your week's performance. Otherwise, you run the risk in software not shutting down and preserving a part of your profit. So when your week's performance is positive, a 0 should be okay normally. Otherwise, it means that you didn't had any week's performance. But if you want to be 100% sure, minus 100 is always good. You will always have more than minus 100 week's performance. I think that's something most people don't know, that you can actually also enter minus numbers. Okay, second of all, buy. You choose there what you're willing to lose. Can be 0.1, can be a 1, can be a 2, but make sure I know that that's how much you can lose or end up less with. Third of all, only when your week's performance has been negative all the time from Sunday until Wednesday are you allowed to keep the software running until Friday. Okay. In all other cases, close it out. Okay. I mean, even if you're still in drawdown by Friday and there was never a positive week's performance, that's the only moment that I will keep my software running until the week afterwards. Okay. In all other cases, these settings are not made to run 5 days out of 5. Okay. Yes, it can work for a given period of time, maybe 1 month, 2 months, but in the end, you will fail. Fourth, always enter a realistic fixed weekly goal. Okay, and I will explain you how you can calculate that, so you don't have to guess. And last one, every weekend recalculate your starting lot size for the next week. Okay, or you will have less chance of reaching your fixed weekly goal. I'm not going to say you will fail in reaching it. No, I'm just saying your chances will be less. So it's one small thing that you have to do. Okay, these are the settings. And I give first really important is only these settings only are correct for Euro USD. So I'm only using Euro USD, no USD GPY, no EJ, no, just Euro USD. And the chart has to be on a daily time frame. Okay. So the reason, first of all, why I choose one chart is that you can maximize your profits better, and it's easier to manage. And personally, I found that EURUSD was, from all the 3 charts that Steve is using, the best one in results until now. Okay, so I gave him the code colors. So first of all, yellow is you only have to adjust it once normally, unless you close out your chart and you forgot to save it as a template, and you have to drag the EA again on a empty chart, then you will have to change these yellow settings again. So don't forget it. The green ones, you just have to adjust them weekly, and the red ones, no, sorry, my bad. It's the red ones that you only have to change once when you start with the EA, or when you by accident close out the chart without saving the template. Okay, and the yellow ones, you just have to change them if necessary. Okay, so here I always use a fixed weekly goal. For the fixed weekly goal, I give 2/3 of my drawdown percentage around 55 total pips drawdown. And again, I will show you that where you can find it in the calculator. Okay, my equity trailing and equity buy is not necessary if I don't change this to trailing equity. But personally, like I said, you can just put this on a 0. Sorry, I forgot to change it here. 0 or -100 and keep it there like all the times. So this, if it's white, I don't touch it. So I keep it on default. So here, total account equity risk, I told you before the other accounts were on a 61% risk. That's what I mean here. So you will add your drawdown and you will calculate it on the calculator. So at the how should I say, the drawdown percentage you get around 225 total pips. Again, I will show you later on. So meaning I can go up to 60% drawdown with the other accounts, and if it hits, I will lose 60% of my balance. But the software will stop working afterwards for the rest of the week. Never restart the software during the week that you hit your equity protector. Okay, starting lot size, like I say, I recalculate it every week. My range between levels, personally, I use 25. Okay, everything between 20 and 30 is fine, but personally, I prefer 25. And the reason why is because, how should I say, if it's lower, 20, that, I mean, I'll explain it differently. You have three types of market situations that can happen. First of all, the market goes your way. So let's say Einstein or Alexander puts in buys and the chart goes up, it goes your way. So it only will enter a level 0 trade, okay? Or the market goes up and down, within a range of, let's say, 70 pips. Then, and then as third, you have the option that the market will go really bad and you run into drawdown from the start, okay? Now, in the first and the third case, a higher range between levels is better, because if your range is higher, it means you can use a bigger lot size. If it's a bigger lot size, in case the market goes good, you make more profit quickly. And if it goes bad, since the range is bigger, your drawdown will be also less, building up less. And a smaller range is better in the second option, when the market is going between a small number of up and down, like 60, 70 pips. Okay. So, but most importantly, you always want your settings towards the worst case scenario, meaning the third one. So, but you also want some more profit when it's going bad. So that's why I prefer 25. Okay. Now the max number of levels, again, I noticed Steve puts his on 10. But what I've noticed is that there's, in certain cases, a flaw in Einstein. I don't know how it is in Alexander, but I noticed sometimes when you put, for instance, on 10, that and you have enough equity, still the software doesn't open a 10th trade for some reason. And it only opens a 10th trade the moment I increase my max number of levels with at least the double of it. So that's why, because I calculated my settings anyway, so I cannot never blow my account, it doesn't really matter which number of levels is written here. So I personally choose a number that I will never reach half of it. Okay, so 40 in this case, or 50, it doesn't matter. Just don't put the exact number of levels, just to be sure. Then the range multiplier, I put it at a 1. For smaller accounts, from $500 up to 2,500 or maybe less, I would increase it on a really small one, like 500. I will use a 1.05. The higher my balance gets, I will drop it little by little towards a 1.0. To 1.0. Okay. Then the position size multiplier, I keep it on a 1.01. Now, if you have a really big account, like more than 40K at least, then you can start thinking about putting it higher to a 1.02 up to a 1.05. I personally, I would not go higher and higher, because it will increase your drawdown exponentially also. Okay, and also it will make sure that you make less money in when the market goes your way. Okay, now must hedge positions always have to be on, otherwise again you might get the trades 2 times, which will increase your risk, also your profit if it goes your way. But like again, Murphy always wants to show he's right, so don't do it. Keep it on yes. Trend levels before hedging, again, I just fill in 100. It doesn't really matter, as long any number higher than max number of levels here is fine. Okay, this one and this one just prevents you get double trades. Then remove stop loss from trades. Personally, I say yes. Why? Because with these settings, I normally don't lose money because it's calculated in a certain way. So actually also trade stop loss, the number here is not, doesn't matter. Also trading for news. I personally, I always have kept it off. Why? Because the moment your software goes badly, most of the time, like the real big moves, they were often outside of the news. I mean, during news you will get peaks, but not enough to blow your account. I mean, that didn't happen in the past. So start day, personally, I change it to Sunday and 23 hours because that's 2 hours after market opening instead of 4 hours, which is when you keep it on default. Okay, so those are the settings. Now, this is the calculator I created like already 2 years ago. No, sorry, a year and a half ago, but I kept improving it a bit, little by little. Okay, so for the US citizens, keep in mind, there's something Steve told me. Thank you, Steve. The dot and the comma there are changed. Okay, we all use a comma where you guys using a dot. Okay, just so you know. So here, again, the color codes, the green is something you can fill in. The yellow you can change, but if you know what you're doing. And the orange are, yeah, that's just the results. So there are two ways you can use this calculator. First of all, let me know that this one and this one gives exactly the same thing. Okay, the only reason why I put two next to each other is because I want to save time. So this way I can compare small changes in settings really quickly without having to write down all the numbers or memorizing all the numbers. So that's just to compare. Now, second of all, yeah, everything is what it says. Here you can fill in your balance, how many charts you will open, what your equity risk will be. So that's how much you're able to lose from your account. And that's in numbers, how much drawdown that means in a number. This is not really necessary. That's just to have this one lower. This is when you blow your full account, which you won't be really using. Here you enter your max number of levels that the software is opening. It does affect the rest of the numbers because let's see, if I only put like a 1, for instance, you will see you can get like a whole lot of drawdown. Up until 1,200 pips, you will only have less than 15% drawdown. But if you change it to 10, you will see it will change. After 600 pips and with no equity risk, your account would blow up. Okay, so does that mean that is a really good idea to say, hey, David, okay, then I just put it on a 2 or a 3, then I will never have really high drawdown? No, because there might be, how should I say, market situations that will never come back to these levels, and you will never be able to close out these trades unless you close them manually or have a stop loss, and your account will bleed to that really slowly. Okay, so it's really important that you let the software take all the trades that it has needs to take. Okay, then this PSM is position size multiplier, RM is range multiplier, lot size, starting lot size, and then of course the range between levels. So it's fairly easy. Now I'll show you two ways that you can calculate your settings. Okay, first of all, yeah, these settings are by default. Like I say, you can change this, but if you don't know what you're doing, keep it on 25. This one, I just keep it as a visual aid because I want the red bar to be at the same level as a yellow bar, and it's easier. So it's easier to spot this number, 225. So what you can do is you can either say, okay, I want to risk X amount of percentage from my balance. So if the market goes really, really bad, unexpectedly, that even the developers didn't foresee, then I'm willing to lose, for instance, here, 20%, and I will still continue without crying my eyes out and quitting. Okay. You can put it higher or lower. That's up to a personal taste. Now, important to know, if you use these settings correctly, a higher equity risk will mean that you can start with a higher lot size and will make you a lot more profit, and will still mathematically, how should I say, take as long, is even less long to recover from than a lower equity risk. Okay, just don't put numbers higher than 60%, 50% or 60%, unless you know what you're doing, and especially no 100%, because that means you will lose all your money. So I personally wouldn't go higher than 50%. I did it just to try it out on a demo, but on a live account, I would never go higher than 50%, because 50%, you just have to imagine you start the week for the first time with 10K, and the first month you already lose 5K from it. Most people will say, I quit. Okay. But if you quit, it is a loss. If you don't quit and continue, you will recover that amount of money within a couple of months. Now, so first of all, I decided. So let's say I want to go up to 25%. Okay, what you see is this red line will change. So let's say it starts here. So what I'm going to do here to see what my average weekly goal can be is, I'm going to up this number, the lot size, until the red line is equally to the yellow line. Okay, so let's say 0.05. It is still lower, 0.10. It's too high, so it has to be in between. 0.6, oops, 0.06, just too low, 0.07. Okay, and then I'll go and see, now it's on the same line, but as you can see, it's still not 25. There's still some percentages in between. So we'll check if I can get closer to the 25. Okay, it works, so I know next one will fail, you see. So I'll be using a 0.08. Okay, again, if you can use a 0.07, that's fine, but you're making not enough profit compared to your risk. So you will have to for the strategy to work and be able to recover your losses quickly enough, you always have to keep the lot size really close to the risk you're always using. Okay, so 0.08 in this case. Now, I was telling you before how you can see what your average percentage gain would be, an achievable average percentage gain every week. For that, I will look at the 75 mark. That means that whenever you come at 75 pips drawdown, when the market moves 75 pips in the wrong way, you will have a drawdown of 2.6% on average. Okay, these numbers can like differ a really small amount, but just to give you a general idea. Also, keep in mind, I have a calculator in dollar and I have one in euro. In euro, as you can see, these numbers will change a little bit, and that is because of how the lot size is calculated in euro compared to dollar. That, you can forget that, just know there's a reason. Now, personally, I made it easy. You have to take this number, 2.6, you have to divide it by 3 and multiply it by 2. So you take 2/3 of this number, and I made it easy. Here, I calculated it automatically. Okay, but it only is correct if you use a 25 range. If I use another range, this number will no longer be correct. Okay, so then you have to calculate it approximately yourself. Okay, so I'll say it again. Take this number around the 75 mark, divide it by 3 and multiply it by 2. And then you have a realistic weekly average gain. Can you make more than that? Yes. Let's say I will reach my goal, keeping on that number like around 75, 80% of the times. And in some cases, I could have made more. And in the other cases, I have to close out manually by Tuesday or Wednesday. Okay, so there's that. Now, I've put here these two next to each other. Let me change this also to 25. And then you'll notice something that I already touched on before. 25.27.3. Okay, this will probably not go higher. No, like I said, 0.3. Okay, like you can see, I take the same risk value. Here I take 25% risk. Here I take 25% risk. But here my balance is 3 times higher. And as you can see, my average weekly goal here is higher. Here it's 1.7, here it's 2%. So this is to show you that the higher you go in a balance, the more percentage gain you can make with the same risk. Okay, so some might say, okay, sometimes it's not a lot by 1.10%, but just make the calculation over 5 years, what 0.1% will make you as a difference by the end of the 5 years. It is huge. Okay, so do not neglect it. It can easily, in some cases, be $500,000 more or less. So if I would ask you, just take 5 minutes time or 10 minutes every Sunday to use this tool to calculate your lot size, you will get $500,000 after 5 years. I think most people will say yes. Okay, of course, it depends on your balance. So that being said, that's the first way how you can do it. Then you can do it a differently way, and there you can say, okay, let's say I want an average weekly goal of 2%. Okay, then what you want is you want here 2%. So here I will be putting my lot size in such a way that I can end with 2%, and I always aim a little bit higher. So just to be sure I can reach it. So in this case, I will need a 0.10. So then I look at this number, and what I see here is 28.5. So I know I have to put my equity risk just a bit that higher at 29%. And then you have to ask yourself, if I would lose 29% of my balance, even from the first month, will I continue, yes or no? Okay, if the answer is no, the risk is too high for you and you have to settle with less profit. Okay, so there's that. Now, I cannot show you due of compliance. I cannot show you, because if I'm not mistaken, it's not allowed, the calculation on how it will affect when you make a loss. Okay, so you'll just have to accept it from me. With these settings, if you would have used these settings with these rules, first of all, in the last 2 years, you would have never lost any money. You would never have hit your equity risk, okay, first of all. Second of all, if you do simulate a loss every year, you still will make more profit after X amount of years, always. I mean, when you put it at 50%, you might even hit it 2 times a year, which is a lot, because normally that should not happen unless there's like a market crash, but at least your balance is protected in case that happens. Also, when you make a loss, for instance, you start out with 50% equity risk and you do hit your equity risk, and then you get scared and you say, oh no, that's not good, so let me change it back to 20%. Then the calculations on the long run will not work anymore, meaning it will take you way longer to get out of that loss. So in order to recover your loss quickly enough, again, you will have to keep the same risk value. That's really important, okay? So I think I said most of it. The most important thing to get away from this is, first of all, you can never lose your full account. You can never blow it up. You will have to do really, really badly and lose, I mean, hit your equity risk like 10 times in a row to be able to almost lose all your money. If that happens, something really, you know, you're doing something really, really badly. If something happens like that, always analyze what happened and why it happened. If you forget to put off your software the week before, or for instance, if you were too greedy the week before and had like only 1% and you absolutely wanted to hit that 1.1%, but it didn't reach there, you fell into drawdown and kept your software running, then yes, your chances of hitting your equity risk is a lot higher the week afterwards. Okay. What else? Know that it's safer to put more money on it. That also. What else can I say? Okay, because it's one pair, it's a lot easier to manage. So if you take, like, for instance, two pairs, then the situations that can happen is either both pairs at the same time in almost no drawdown, and you can close everything out, or you can have one pair or the other pair in drawdown while the others is not. And the fourth option is that both are in bigger drawdown. So however you look at it, you only have like one chance out of 4 to have the ideal situation. Okay, with this one, it's either good or bad. I only have 2 situations. And if it's even worse, if you have 3 pairs, because then you can have more than 4 possible combinations. And there's only one good one. Again, if you want to diverse, it's better to take 2 softwares, 2 licenses, and put one on EURUSD and the other one on USD GPY, for instance, or on a completely other pair, because this strategy will also work on other pairs. The only thing is I do not have enough data. I'm running it now to collect the data for a longer period of time on all the other pairs, because some pairs, they're really tricky. Sometimes they don't move so much, but they always move up and down. But if they move in a trend, they go way to another zone and without ever returning. So, and then you might get stuck there. So that's not a good idea. So you have to know your pairs also. But in general, that's it. Are there any questions?
David, one of the questions that was asked by Janet, it said, wouldn't 25% equity risk wipe out most people's accounts on a weekly basis, as it's common for drawdown to go that low before it recovers? And if I'm hearing your presentation correctly, the answer would be that'd be pretty rare on a one pair, 0.01 lot size, right? So
indeed, either if you use the 20% or the 50%, if both persons use the software correctly and the way that I explained it, you will both hit your equity risk around the same period of time. Okay,
no, that's good. And I'll tell you guys, one thing I would suggest, as I always do, to both your up and down lines, make sure for those, I don't care if you're just putting part-time into Alexander or Einstein, I think y'all need to make sure everybody sees this part of the presentation. So as we've time-stamped May 30th, right? We'll be time-stamping now the 12th of September for our next set of settings. So if you guys just remember September 12th, Saturday call with Steve and David. I think this will be important too. And I don't care if you need to watch this, guys, 10 times to get it. Okay. Just make sure, because this can get quite sophisticated, and this certainly can fly over a lot of people's heads, that, you sort of help drill this down into your team. This is another choice. Again, our goal here at Auvoria is to present you guys with choices that have been exceptionally well vetted out, as David has exercised today. So any questions on that for anybody?
So let me hit back on the question that they asked, Steve. So the reason why you will not hit your equity risk quicker, even if you put it on 10%, is because your starting lot size will be a lot lower. Yeah, so you'll also be making a way less profit. But and your drawdown will go way less down. So it's like give and take. You have to decide yourself which one you need. Like you see, when I put it at a 10% risk, you will only make an average of 0.33% profit. But for people who might have like $500,000 on their account, they might not feel comfortable in losing $250,000, like when the risk is at 50%. They might say, hey, I'm only willing to lose 50K from it. That's already a lot. but then they will have to settle with 0.3% on average every week, which is still fine. That's almost like 1% a month on five. That's 50K a month already in profit. I think most people have to work really hard for that during the month in a normal job. So it's because it's calibrated towards each other. So it's really important that you use the correct values. Also because I see some people asking for the Excel sheet. As long as I'm not giving the, the status of an EA coach, I will give these Excels to Steve, and he can put them in his channel. And
yeah, so for all the questions related to that, guys, this is one of those slippery slopes of compliance, as you guys know. That is not I essentially don't drop the gavel on that. It's going to be up to Mariska and the compliance-oriented folks in executive management as to, as long as David's okay, he's done some fantastic research, so we applaud him for his work and effort. But getting it out to everybody, and I always use the, you guys love my F1 analogies, right? So here's another F1 analogy. If they don't know what they're doing, you're certainly not going to take a toddler out of a go-kart and stick them in one of those little track cars, right? So it's the same thing with this spreadsheet. Just make sure you have everybody watch this presentation 10 times if they need to, so that you understand what changes have been made. I know it's a little scary when we present changes out there to the masses, but I think it's important to have different perspectives on performance. And the goal primarily of these calls for me is to lower your risk. Any additional questions from anybody? Because we're getting ready to blow out. It's 11 a.m. Pacific time, and I have a date with a set of golf clubs. Anything else you want to add, David?
No, that's it for me. Thank you for allowing me to share this with you guys.
Good, guys. Any questions at all? svetteral@auvoriaprime.com. Wishing everybody a great week. Be safe. Let the trades be with you, and make sure you spread the word of this call, right? So just be thinking, Steve's in the back of my head, I got to tell 10 people about this call, right? So that everybody's out there watching this, and we'll make sure, if we're allowed to get the spreadsheets out. And there's got some pretty good tutorials, as you can see on the bottom tabs that David set up for us. So thank you much for your time, David, and have a great weekend, bro.